Hi guys, it's Any, aka the Noctrader. I'm back again with another stream. Okay, I'm live, guys. I'm live. I'm gonna start messaging people in my Discord chat room. Remember, I've got a chat room called Discord, on Discord called Pip Talks. It's a chat room that I've made with myself and my friend Curtis from Infinite Investors. Check out his channel. We just have different channels for investment and trading. So I run the trading channel, and I just talk about anything and everything to do with trading and swing trading in particular. But there's also some day trading. There's a lot of great participants in that chat room. It's quite a small chat room, but I like it because everyone contributes pretty well. And we got a watch list channel where people post their charts. And then we got a investment channel with Pip Talk, with with I don't know what I'm saying these days. With Infinite Investors. Infinite Investors runs the investment channel where they just talk about investments, and he has video blog requests. So I thought I'd just talk about that at the beginning while we see who's logging in. All right, so got a couple people on. Can you give me a hi in the chat just so I know people are there? Let's see some audience participation. People post their charts. Let's see some audience participation. But if I could just get hi in the chat once again. But anyway, let me get started. I'm going to get started either way. Okay. First thing I want to start with gold. So gold is as you know, gold is inversely correlated to the market. So what that means is that when equities are down, gold goes up. And as we all know, most of the major indices have been selling off. If you look at the Aussie ASX, the Aussie Exchange, it's been selling off. If you look at the DAX, it's been selling off. If you look at the Dow Jones, it's been selling off. And why has all these been selling off? Hey guys, yeah, Shekel, Ahab, Joe Berg, Jet Life, Harley. Yeah, hi guys. So they've all been selling off because, you guessed it, the coronavirus. It's messed up the world economy in general, and most of these indices have been selling off. And as we know, the indices are a good indication of how the shares within the that country are doing, because obviously indices are all about weighted averages of stocks within the top market cap of that country. So if you see all the major world indices, the major economies in the world, the indices are selling off, then that means that there's most of global equity selling off. And what does that mean? That means gold is probably going up, because as we know, people use gold as a safe haven asset for their capital when the equities market is down. So with that being said, I go into gold and look at gold. Lo and behold, gold's been climbing. Now, if you know me, I've been following gold for some time, and I've got lots of lines plucked on gold because gold's been something that I know that I want to invest in quite a lot as we head towards a recession, which is why it's been climbing so much up since about June 2019. If you look at the bigger picture, gold has, for the most part, it was just moving sideways since about 2016. It was on the pattern that it was presenting was like a converging wedge or maybe an ascending triangle. So it was keep hitting this resistance line and then ricocheting off. But around June 2019, gold broke out. Gold broke. Yeah, Super Bowl tonight, man. Yeah, I'm watching the Super Bowl. I think the Chiefs are going to win, by the way. But anyway, we'll talk about that in a second. Gold broke out of the upside, and the minute it broke out of the upside, it started soaring. Now, as you know, once it got to about 15,000, it started retracing. And so I did a Fibonacci retracement, and I found that from this point here at 1264 to the recent high of 1560, it retraced to the 38.2 Fibonacci level. And as we all know about Fibonacci level kind of dictates if there's an upward trend. The Fibonacci kind of gives you a rough indication of where price may retrace to before climbing again. And that's exactly what it did. It retraced to the 38.2 level before climbing. So I believe gold is going to continue rising, especially in the light of this coronavirus, which is kind of just messing up the whole global economy. So people are getting scared and putting their money into gold. I don't know what it's going to do in the long term, but I believe gold will make its way at least to the 1636 mark. This orange line I drew when gold was still around here, and lo and behold, it's actually climbed to this point. So I think gold can really climb up. But me personally, I don't actually trade gold. I use gold as a way of indicating how I'm going to trade a gold ETF, because gold ETFs. What's up, Demola? What's up, Shekel? What's up, Stacks? Yeah, I think if gold's going up, then that means that some of these gold ETFs are going up. So then I will go to the ETFs, and I've even earmarked some of the ETFs that I'm looking at right now. So that NUGT is one that I've got on my radar, and JNUG is another one that's got on my radar. So I'm going to highlight these ones purple. Actually, I like to highlight purple, the ones that I think are ones that are good to trade. The reason why I'm highlighting these is once again because gold's going up, and they're correlated with gold. They're triple leverage ETFs, so that means that when gold goes up, not when gold goes up, but there's a certain amount of stocks that are strongly correlated with gold, and when gold goes up, they go up. So this in turn, these stocks go up. I'm not doing boohoo tonight, guys. No boohoo tonight. No boohoo tonight. So with that being said, I think these ETFs are gonna go climb. So I've got my eyes on JNUG and JDST for the next week or two. And if you look at them, if you look at this, it's almost made like a bowl shape. It's been ebbing and flowing, but it's making a ball shape up, and that just looks like it's going to continue. It's kind of bottomed out here, and I believe it's going to climb up some more. And the same thing for NUGT. And the 180-day simple moving average on NUGT looks really promising. It looks like it's going to climb up. And this reminds me very much of another stock that actually someone else called out in the Pip Talk group. I'm actually going to show you that stock now. It's CEY. One of our members of Pip Talk was calling out CEY for quite some time. And I actually added it to my watch list just because he called it out. And it looked like a really promising stock, but I didn't get on in it. But lo and behold, it did what he said it would do. Now I'm just gonna get up. I want to shout this person out rather than just saying one of our members, because it was a great choice of a stock to pick out. And I like to give praise where praise is due. And it's Stacks. Stacks, it was you. It was you that called that CEY, wasn't it? Yeah. Okay, Stacks. Well done. That was a good shout, and I'm gonna cover that now actually. But just to show that we're not chatting nonsense. As you can see here, Stacks. This is 31st. He was speaking about CEY, and he was speaking about it again before. Doesn't go back that far. Okay, well, trust me on it. Stacks was speaking about CEY for some time, and then it kind of went up. Okay, so now I'm going to talk about CEY. And if you look at this chart here, NUGT, the way it's presents itself quite similar to CEY as well. They're two different stocks, but I like to show how two patterns that behave in the same way, so that when you see something happening, you can capitalize on it again. So CEY, look at this. The 180-day simple moving average was acting as almost like a support, and price was climbing. It was making high highs, but using the 180 simple moving average as a support. And as the 180-day simple moving average started curving up, that showed that, as we all know, 180 simple moving average, I use that as a kind of indicator of the overall movement of price. When the gradient is up and to the right, that shows that price is in a bullish momentum, and it's even better when the 180-day simple moving average is below price. And it was checked for both of these. The price was above the 180-day simple moving average. And it looked like it was curving up. So when it came around this area, Stacks called it out, and he was right. Sorry about that. It's just a cold, mate. It's not the flu. Don't worry, guys. Yeah, it climbed up and it shot up. So if you look at this, and let's go back to NUGT. What I'm trying to show you guys is that once you start getting a lot of chart time, you start seeing the same patterns present themselves several times, and then you start being able to work out how they're going to behave. It's not always a like-for-like match, but you can start to kind of identify certain behaviors in certain charts, and then you see history repeat itself. So that's why it's good to get a lot of chart time, because you start seeing some certain things that are hard to explain, but once you've seen it before, it's easy to identify again and take a position, because you know how it's reacted the last time. So as you can see, both of these, they're not exactly the same, but they're close enough that you should take note as to how they're behaving. The 180-day simple moving average is curving up. The 180-day simple moving average is curving up. Price is using the 180-day simple moving average as a support. Price is using 180-day simple moving average as a support. The price is making high highs. Price is making high highs. Price is ebbing and flowing. Price is ebbing and flowing. So it's understandable why I would think that price here, it may kind of ricochet for a bit, but I believe the overall momentum of price in NUGT is up, and this is a great point to get in on the long trade, because in reality, all I need to do is get in a long page and trade and set my stop loss just underneath the 180-day simple moving average, because to me a breaker pattern is when price goes below the 180-day simple moving average, because it's been using it as a support for most of this move. Does that make sense, guys? Let me get some feedback. Does that make sense, guys? All right, cool. I think it does. I think you guys get it. Anyway, I'm gonna move on to the next one. So the next one I'm looking at is what's the next one I'm looking at? The next one I'm looking at is VIXY. Now, before I look at VXY, I need to give you a little bit of backstory on what it actually is, what VIX is. Now, the VIX is like a, how do I describe the VIX? Yeah, VIX is an indicator, or, no, it's not an indicator. Basically, okay, this is a hard one to explain. The VIX indicator is a velocity indicator, and what it is that a lot of Americans in particular try to trade options, and what they use is that they'll use options. They got call options and they got put options. And what options are is that you enter a contract that is timed and has expiry date. And the whole idea of that is a way that a lot of, especially institutional traders, use to leverage hedge positions. So if an institutional trader is overexposed on long positions in equities, they might take the equivalent of a short option, which is a put option. I think that's right. Yeah, I think that's right. A put option on a equity or an indice, so that when the market is down, they're making money on the way down, even if their equities are selling off. It's a really hard way to explain, but what I'm saying is that if institutional traders are in a lot of long positions on stocks, and the market is selling off, that means the value of their stocks are selling off as well, and they're losing money. So to hedge their bet, they'll take an options trade. That means that they can make money off share prices going down. So even if their equities are losing value, they're making the money back on the options, right? Make sense? So that means that whenever the market looks like it's selling off, one way to make money is to buy gold, as I said, because gold is inversely correlated to the market. Another way to make money is to probably go long on the VIX, because the VIX is basically an amalgamation of options contracts. So whenever there's a high level of trade in options contracts, the VIX index goes up. And normally the VIX index is heavily correlated to the market. When the market's doing badly, people take hedge their positions, and the VIX spikes. That's a really long-winded way of explaining it, but I'm probably making another video on it. But that's the best way I can explain it. So with that being said, I've actually drawn some lines already on here, but I'm going to delete them for your benefit, and I'm going to draw them again. So what I see in here is that when the VIX spikes, it spikes in a very emphatic way. So we can make a lot of money in a very short space of time if we get into a good position on the VIX. And as you can see here, price curves, when the VIX goes from here to here, in 25 days, you made 200%. In 3 months, you made 99%, which is good. So, and what it looks to me here is like a falling wedge. And not only does it look like a falling wedge, it looks like it's breaking out of the upside of the falling wedge. And right now, the markets are selling off in a big way once again because of what? Exactly, the current coronavirus. So what that means is that we can capitalize off of shares selling off. Do I have any videos to learn at this? I'm new to this. Jet Life. Yeah, I've got lots of videos. Jet Life, check out my video series on trading for a beginner. It's a playlist that I have on my channel. So go scroll down and you see, like, I think there's about 12 videos on how to trade for beginners. I've made them quite short. So if you want to check that out, Jet Life, that's good for beginners. But yeah, so how I can make money off this, I think, is to take a long position on the VIX and set a stop loss just underneath here. So if you took a long position, you could risk about 200 pips, and the upside could be almost 500. So that's about, to be honest, you don't know where it's going to go to the upside. It can go as far as if there's really no telling how high it can climb, because rule of thumb is that when it climbs, it climbs in a big way. So I wouldn't expect it to only go like a short. I'd expect it to go really high. And also, rule of thumb with falling wedges is that the way it comes in is normally the way it comes out. So like, if it took 2 months to go 1,200 pips, most likely it will go 1,000 pips and 200. So I'm gonna draw my profit taking box here, so that if I'm right, at least we've logged it here, and we know that that's where I thought the profit taking was gonna be. So do a little borderless box. I like to do the borderless box here, and then I will just draw an orange line just for reference, so that at least we can reference this is what I thought was going to happen, and then we can revisit it at a later date. Guys, do you have any stocks that you want to pick out? Put your stock picks that you want me to cover in the chat area, and I will cover them as we go on. But right now, I've got a list of stocks that I want to cover. But if there's any one that you guys want to cover, just pop the ticker symbol in on the chat. All right. So now I'm covering AD&T. AD&T, this one is more of a cautionary tale, because I actually covered this last week, and I remember I did a full analysis of it, and then at the end, someone in the chat, thank God, told me that they had their earnings, so I said I'm not trading it. And this is exactly the reason why I try not to trade stocks during earnings, because things exactly like this happen. So last week, I was looking at AD&T, and all of the signs pointed to a sell-off. Why did it point to a sell-off for me? Because it'd been moving sideways for God knows how long. Price was underneath the 180-day simple moving average. The 180-day simple moving average looked like it was curving down, and it just gave me all the signs of a sell-off, to be honest. So in my mind, I thought this was a good short position. But the minute someone told me that the earnings was on the 29th, I said, abort mission, do not trade this. Now, I'm going to cover Alibaba next. Now, abort this, do not trade this. The reason being is that earnings reports are it's like rolling the dice, especially with swing trading. Earnings reports are like rolling the dice. If you don't, a company can be doing really badly and have good earnings reports and go up. They could be doing really badly and have good earnings reports and still sell off. It's weird. I don't really know how earnings reports often correlate to the performance of a company, because sometimes they can be doing well, everything can be going right, and the share price is still going down because maybe they've been climbing for too long, and then people that have taken an early position want to realize their profits and take their money out. So you can never really tell what is going to happen during the earnings reports, even if you could tell how well or how badly a company is doing. So that's why, as a swing trader, if I know earning reports are near and I haven't done my due diligence of the company, I probably won't trade earnings. Now that's in real contradiction to what I've done, because I made a lot of money on Uber, but it's because I'd done my due diligence and I really understood what was going on in Uber from both a fundamental and a technical aspect. So the short of it is, don't trade earnings if you don't know enough about the company. And as a technical analysis trader, I stay away from earnings. I try to trade predictable patterns, and earnings is too much of a unknown territories when it comes to the information or what's going to happen. Demo's calling out Alibaba. I think I know why he's calling out Alibaba. Another coronavirus related stock, I'm guessing. Am I right? Because Alibaba is obviously a Chinese company that relies heavily on shipping products from China to the Western world. And with all this coronavirus stuff, I'm sure there's going to be a lot of problems with the likes of getting their stuff past customs in any Western country because of the scare of the coronavirus. And lo and behold, their share prices are suffering a lot. And I believe that this is just the beginning of their woes. I believe it's going to sell off some more. But do you know what I'm like? I'm Alibaba is a good company. Hopefully the coronavirus will be contained. If it's not, then they're gonna continue suffering, and they're gonna continue bleeding. What I like about this chart is that I love to see this, where if a company's selling off, they will sell off. So it'll go something like this, and then they'll retrace, and then they'll continue selling off. That shows me a true sign of that it's really good, making a downward movement. And normally this is the place that I would like to enter, because then I can set a tight stop loss, and then I have minimum risk. But this place is still not a bad place to enter as well, because this risk is not that bad, because in reality, if it carries on going down, then you're only risking that much to make that much. But I would preferably have entered here. So like if you go down to the 4-hour chart now, and you look at the MACD RSI, look at the MACD, look at the way the MACD shaped. This looks like it could be selling off as well. And the 180-day simple moving average is above price as well. So I believe the sell-off could continue. But what I would personally like to do with Alibaba is, because Alibaba is a good company, I would either try and find a favorable position to short, or wait for it to hit rock bottom, and when the virus is, everything's been sorted out with the virus, I'd buy it. Because, you know, when something's selling off because of some sort of crazy news, once the news is either rectified or people think they've overreacted and now they want to get back in the company, that's the place to buy the shares again when it's hit rock bottom. Because Alibaba, at the end of the day, in long term speaking, they're going to do well because they're such a big company, they're such a successful company. So this, you can either look at this as a means to short this company into the bad news about the coronavirus, or you could wait for it to kind of find a happy medium when it's sold off quite a lot, and take a long-term view, to take a long position, because once the coronavirus stuff has been solved, hopefully it does, otherwise we're gonna be in a lot of trouble, then the share prices will probably retrace back to where it was and regain most of the losses that it had because of this virus, if that makes sense, guys. So yeah, that's my thoughts on Alibaba. Now, I'm going to go to one of the stocks that I covered last week, which was PPB. I had a long rant about PPB, because, and my rant's going to continue today. So PPB is Flutter Entertainment, which is the trading name of Paddy Power and Betfair. And if you know about anything about what's going on with Paddy Power and Betfair, you know that they are in serious trouble. Not serious trouble, but the gambling commission is going hard, is really got their sights on them, and there's lots of bad news, fundamental news around the fact that now gamblers cannot use their credit card to fund their account, and this I think it's gonna have a really big effect, and it's already started having a big effect on them already. They've been climbing, the shares have been climbing for like 7 months, and now it's only now that they've kind of broken this ascending channel pattern that they've been on for 7 months, and it looks like this is exactly the type of pattern I look for when I'm trying to take a short. This is exactly the type of pattern. What I look for is a break of the support, but that's not enough for me. I want to see a break of the support, then I want to see retracement back to the old support as a new resistance, then I want to see continued sell-off, and that's exactly what I've seen here. So I believe that's going to continue selling off, and while it does that, this would have been the best place for me to have taken a short. But I didn't take one short here, but this is just as good. This is just as good a position to take a short. And I believe it's going to continue selling off. I believe we're just at the beginning. And I believe that this is going to be... This stock is going to do what Activision did. If anyone remembers Activision Blizzard, they sold off really badly because they had lots of problems so I believe that it's going to do... let me return back to Alibaba. No, let me go Activision, then... Where's it? Where's PPB? That's it here. So here's Flutter Entertainment, which is the betting company, and here is Activision. If you look at Activision, they were doing so well for so long. Can you see that? They were even doing well longer than... They're pretty much doing well for the whole time that they were listed. If you look at that, they spent from January 2017, 5 years of just growth for Activision, and then troubles ensued, and then they lost like nearly half their value in less than 5 months. So 5 years of growth and 5 months of just turmoil. So, and that's what I think is going to happen. I don't think it will be as pronounced as Activision, but I believe that they are going to see some hard times. They're going to see some hard times. Flutter Entertainment, and just because of the gambling commission. If you follow me on Instagram, you know that I posted some Instagram pics about it, and I went into some depth. But if you check my Instagram, that's at the Noctrader, you will see that I normally post about companies that I'm looking at. But right now, to me, everything's a short to me, mainly because of the coronas. Unless we hear some great news next week about how they found a vaccination for it or some sort of cure for it. As I see it right now, fear mongering is what's sending the markets down and everything's selling off. So any gains that have been made or any bullish signals that I saw in charts are really getting wiped away. So I'm looking for short positions right now. And DAX, yeah, I'm not going to cover DAX because, as I said, all of the major indices are doing the same thing. So I'll just be repeating myself if I cover DAX. ASX, DAX, Dow Jones, all selling off. And all of it is due to the coronavirus. And so just have to... What I'd say is that the best way to play this would be that as eager as you might be to want to take a short, you have to time your entries. So I'm not to say that a short isn't right, but for something like the DAX, somewhere like here, I want to short it because it's selling off for like 1, 2, 3, 4, 5, 6 hours, 6 4-hour charts. Maybe that's 3 days or something like that. How many days is that? It's been selling off for 2 days or something like that. So I would expect a little bit of a retracement. I always like to get in at a perfect position. I don't like to get in at so exactly, this is what I'm talking about with the DAX. I wouldn't want to get in here. I would like to wait for some sort of retracement and then a sell off, and this would be where I want to get in. Because if you look at these charts, they never just go like that. They always go. Even if they're selling off, you wanna be clever in the way you time your entries. They'll be going like this. They'll go up, they'll come down, they'll go up, and they'll come down even further, and they'll come up, and they'll come down even further than last time. It's always like a little bit of like a ebb and flow. So if you get excited here because you see it selling off, you might be sitting in the red for some time before it goes down again, and you never know if it's going to go up. So you might lose your nerve between here and exit your position and then start selling off. That's happened to me a lot of times. So I'd rather, when it goes down a lot, I just wait for the retracement, and then I time my entry to sell it, to short it again. And that's where Fibonacci comes into handy, because then it can help you really predict where the next potential move could be. So I don't know where the next potential move could be here, but let me try play around Fibonacci so we can work out next potential move. If you know, this is exactly the same type of chart I did when I was doing ASX. I actually said, remember, I used a Fibonacci to predict that this ASX was going to go long. This was 2 live streams ago, if you remember. Watch the live stream 2 times ago. I actually drew these lines on ASX, and lo and behold, that's exactly what happened. It climbed. So Fibonacci is your friend. You just have to use it wisely. So I'm not sure where it would retrace to just off of a blind test, but you just have to play with the charts and see where it could take you. I'm not sure here. I'd have to do some more digging. I don't want to bore you guys with me messing around. I'll post it on the Discord group if I work out where I think it's going to retrace to. But I do believe there's a retracement. I believe it's going to move sideways for a bit, retrace up, and then sell off. So it's down to me to kind of work out where I believe the change of direction will come, and maybe the MACD can give us some insight. If it starts flattening it out and then starts curving down, that could be a signal as to when it's going to start selling off again. But yeah, that's the way I would play the DAX right now. But yeah, 28 minutes. I don't want to go over 30 minutes before you guys all log off and get bored. Thanks for watching, guys. Live stream every Sunday 7 p.m. unless I have things to do, because I want to have a social life. It's Any, aka the Noctrader, signing out.